Patisserie Holdings, which owns the Patisserie Valerie brand on the high street, it's an AIM-listed stock. It remains suspended as we speak after what the company said was a significant and potentially fraudulent set of irregularities that's ended up in what's been reported on as a £20 million accounting black hole. Chris Boxall, AIM stock specialist and portfolio manager at Fundamental Asset Management, joins us now. Chris, I know that you are a personal owner of the stock, aren't you?
Yeah.
As well as having clients of yours in it through your portfolios. First of all, what attracted you to this investment, which has so apparently gone so dreadfully wrong?
Well, what attracted us attracted so many other people. This is a very simple business to understand, a highly cash-generative business. The cash looked real. It's hard to disguise cash. It was also a business that was very easy to follow. I mean, we did our own work. We were actually very concerned, you know, in the summer, just before the summer, hot weather, how trade was picking up, and we visited 30+ outlets over the past few weeks to assess how trade was. And you know, at the coalface in the shop, they seemed to be doing really nicely. Even the Sainsbury's as well. So we really, you know, we were walking the streets and looking at the real activity. Evidently, when it's a fraud, it's very hard to tell what's going on, and however much work you do, this one looked squeaky clean right the way, you know, down the line.
Yeah, I said there about this £20 million black hole that's apparently opened up.
It's even greater. It looks like
well, I think actually that's the case, isn't it? Because they're also talking now about a debt that no one seemed to know about, or it was clouded in some sort of accounting irregularity. I mean, how deep is this likely to go?
We don't know. I mean, it's absolutely shocking because it looks such a clean business, and because it was managed by two such reputable, experienced operators, were overseen by them, both of whom had huge equity stakes. I mean, it's absolutely unique. You know, we can normally smell a problem company a mile away, and have thankfully avoided most of them. But this one, it was almost impossible, because the headline, the reality looked really good. Clearly something was going on. I mean, people have spoken about the overdrafts and the fact that these hidden overdrafts, and they said, well, why didn't the bank pick up on those? The fact is, if there's an overdraft with a cross guarantee to another group company, the overdrafts could have been netted off in the accounts. So there was no reason to suggest that a bank looking at the results would say, well, why isn't our overdraft showing? Because they might have been netted off against the significant cash balance. And at the moment, we don't believe any cash has actually been taken. It's not a bank raid. Our money's actually on a sort of good old-fashioned VAT fraud at the top, and it's no accident that the HMRC claim has really pulled it down, was seemingly one of the catalysts to reveal this.
One of those two people you mentioned was Luke Johnson, a veteran entrepreneur, specialisms around this type of business, of course, Pizza Express and so forth. Tell me a little bit more about Luke Johnson and his involvement in the business. He, as you said, retains a large slice of, forget the pun, Patisserie Holdings.
Yeah. I mean, he owns 37%, and he must be absolutely mortified. I mean, this was a staggeringly large investment. I mean, both him and the chief executive, Paul May, the combined 41%. That's huge. And you'd have thought they've lost the most and had most to lose. And they've taken this group as well from, I think, a humble 6 outlets up to just over 200. Now, so they must have been very, very hands-on. This hasn't just been a corporate financing creation of acquisition-led growth. It's been all organic growth, outlets opened from cash flow. Therefore, for them to have missed this is pretty staggering, because you know, they would have been privy to the detailed numbers, privy to the VAT returns and all the other minutiae that you know, the core management team would have had.
But of course, the other thing is about this is what the accountant's doing this. You're an accountant. Doubtless you've gone through as many of the figures as you can possibly get your hands on. I mean, Grant Thornton, why didn't they see this coming? I
don't know. I mean, people have spoken about, well, the sales trends were very regular. Well, they were very nifty in their store opening formats. You know, they opened, whilst they pronounced they opened 20 stores, they actually closed 5 last year as well. So that if a store came, you know, wasn't working, they were quick, and the lease was coming to its end, well, they get out. So there was no reason why they couldn't have such consistent numbers. They had a very, very slick store opening and closing system. I don't know how the auditors wouldn't have spotted something. And there's people as well have alluded to the role of non-executive directors and the fact that the company has quite a slim board. And it's true that there are only three executives, 2 non-execs, but both of those non-execs are highly experienced. One of them's Domino's Pizza finance officer, and the other one's was part of a restaurant group involved with the starting of Frankie and Benny's. These people are industry specialists, experts. That not you find me a non-exec on the planet who has actually looked at a VAT return in the last few years. I very much doubt it. They don't go into that detail, and we think that the devil is in the detail in this one. This is where the problems are, and the auditors are privy to that information.
Okay, we know from high-profile headlines we've seen that Luke Johnson has put his hand in his pocket to help out by some considerable margin. Of course, you said he owns over 30% of the business.
Yeah.
Paul May, what of him? Is he contributing? Is he obviously hit heavy?
We don't know yet. We've got fairly basic information of the rescue package, which has seen institutions. We don't know who those are. Conceivably, Luke Johnson and Paul may be part of the equity injection as well. At the moment, for the purposes of speed, to keep this business going, Luke Johnson's provided some debt lines, one of which will be repaid very, very quickly when the new equity comes in, and the other one will remain in place, I think, on an interest-free and fee-free basis, which, fair enough, he's come up very, very quickly and done it. It is a bit worrying now, that he had so many interests, and many people have mentioned that. But this was a major, major investment for him. I cannot believe he wasn't, looking at this very, very closely, and will evidently keep an even closer eye on things going forward.
Yeah.
But you just going back to it, you can do all the analysis you like, and we've done it, or we've actually, visited a large chunk of the estate to check things, and sat there for a while and witnessed sales and people and coffees being purchased. But when there is a fraud deep down in a business like this, it's very hard. And a cash generative business.
Yeah, let's look at the share price. The stock was suspended at 424 pence, which is where this was, which was, I think, Tuesday the 9th of October. What happens now? I mean, when this comes back from suspension, you expect a massive drop?
Well, new money's been raised at 50p. The big question mark now is, what's this business worth? They've already announced, I think, 12. So they've rejigged the numbers, and we've got a 12 million EBITDA for the current year, as opposed to the original forecast of just shy of 30. Now that 12 million of EBITDA currently excludes, they've stated it excludes exceptionals. Now 12 million in EBITDA on 120 million revenue is a vastly different business in terms of the margins than a 30 million on 124 million of revenue. Is that really the norm of this business? Was it never a business, or not in its listed life, that should have ever been promoting operating margins of 18%, which weren't, yes, they were high, but they weren't even astronomical. I think Starbucks is 22%. For the sector where there's a lot of added value in cakes, and bear in mind, the more outlets they opened post IPO, a lot of their products were being manufactured from the same bakery, so they were sweating those assets, economies of scale. So there are so many arguments to say, look, yes, these margins are good, it's doing well, which were all supported by the cash flow. And cash doesn't lie normally, and I don't think the cash coming in has lied here. I think the accounting of it may be.
Okay, so 424, it floated at 170. They raised cash at 50 pence. Do you think it's going to be closer to 50 than it is 170?
Absolutely. I think it's going to be a lot closer to 50. I think, when it relists, as they've alluded to, I think they need to provide as much information as possible. I expect the auditors to be working extremely hard with the help of other advisors to give us some real true figures, because we're reliant on true numbers, but it is isn't it a terrible indictment of the auditing profession? Something has to be done, because this should have been spotted.
Let me just wrap it up by asking you one final question. Taking a big step back and looking at the portfolios you offer clients, are you going to change the way you do your due diligence based on what you've learned so far from Patisserie Holdings?
I don't think we could have done any more, and in fact I think we did more than we could have done. I doubt many people would have sent people out onto the streets of London buying coffees and cakes, and also into Sainsbury's. I think we, at the heart we did as much as we could. At the top level analysis, it was hard to distinguish anything, to detect anything. I think a fraud's a fraud, and a deep fraud like this is very hard. Perhaps looking at this objectively, the role, the board could have been better lower down in the subsidiary level. There could have been representation of at the subsidiary level. It was just very much the Luke and Paul show, seemingly, with the assistance of the finance director. There could have been greater board presence. But that's the nature of AIM and entrepreneurial businesses. You do not want to overburden them with regulation and quite frankly, excessive costs. I mean, we've seen so many boards overladen with non-execs who are each walking away with 100,000 and doing sod all. I mean, this is an entrepreneurial company, and small caps are like that. Yeah. But clearly it's shocking for the main shareholders must be absolutely mortified.
Okay, Chris, we've got to leave it there, but thanks indeed for joining us, and we'll wait to see whether or not there's any criminal outcomes on this and sentences passed and so forth. That was Chris Boxall from Fundamental Asset Management with an overview of Patisserie Holdings.